Hello and welcome to our daily update. Another week, another global meltdown. The Stoxx 600 had hit an annual low and short interest has surged by 31% over the month to reach 2.8% of the total market capitalization. This prompted us to follow up last week's piece where we screened the NASDAQ 100 to identify our price earnings superstars. We turned our attention to the Stoxx 600 and we identified those companies, or those top 20 companies which have the highest price earnings ratio and the top 20 which have the lowest price earnings ratio, and we've overlaid our securities lending data to see investor sentiment towards this group of companies. The average price earnings ratio across the Stoxx 600 is 14.3, but looking at the group of 20 top companies, the average across that group is 67, much, much higher. From that group, we can discern our price earnings superstars. They trade in a very high multiple, but they see low short interest, denoting the fact that short sellers do not believe them to be overvalued. First up is Petroleum GEO. You can see from the chart that short interest is low and it's been falling. Turning to Amadeus, again, short interest has fallen dramatically from a high earlier this year. Tullow Oil is the third price earnings superstar, and we would include the luxury brand Bulgari and Hermes, but we've chosen not to given the fact that they've got a very low free float. It's interesting that short sellers across Europe are not especially focused on this group of companies with trading on high multiples. The average short interest across this group is only 2.9%, which is broadly in line across the wider Stoxx 600 index. That's very different to the picture we witnessed with the NASDAQ 100. For the full report, please visit our website, dataexplorers.com/news.